Hello and welcome to Dinis Guarda YouTube podcast show, once again powered by citiesabc.com, businessabc.net, and wisdomia.ai. We continue profiling global leaders, global personalities that are changing the world of business and technology, and firstly, people that are pushing the boundaries of how we deal with the areas of the most important thing in our time, that is the technologies that we use on our daily lives. And of course, in this series, we've been always portraying some of the big achievers that are actually pushing boundaries in a lot of different areas when it comes to business, investment, technology, and the crossover between all of these different things. We are in a world that is more than ever shaped by technology, and from the fourth industrial revolution, and the technologies like blockchain and artificial intelligence are present in our daily lives, in some ways invisible, in other ways not so invisible. And of course, we are going through an interesting trajectory when it comes to a lot of these technologies. So I'm very excited today to welcome to our series Matthew Merle, business executive, investor, and author with 4 decades over of experience in private equity and venture capital investments. Matthew Merle is the CEO of Blockchain Coinvestors, an investment management firm specializing in blockchain technology. And this organization that was founded in 2014 and headquartered in San Francisco has a global presence and some fantastic achievements that include investment in over 40 blockchain ventures worldwide, supporting a portfolio of 750 blockchain companies and projects, and including over 75 unicorns in the blockchain sector. Aside from the role as the leader in Blockchain Coinvestors, Matthew is also managing partner at Keiretsu, a prominent early-stage venture investor backing more than 300 companies annually. He is also a managing partner at the Fifth Era LLC that invests globally in private equity and venture funds. In addition to direct investments in operating companies and other private opportunities, including real estate. The CV goes big, and that's a lot of achievements. I would say that as well, his work on the blockchain community and on the investment community includes as well a membership in the Bank of Angels, the first high-tech angel investment group in the USA with millions of dollars of annual investments in 20-plus startups each year. He is also chairman of Securitize in Europe and vice chairman of SFOX. And of course, from some of the work that he's been doing, that is quite impressive, and I think the number speaks for himself. I would say as well, probably as well, that he's been a keynote speaker, leader, that includes part of keynotes in some of the top universities like Durham University, Oxford, and Said Business School, and a lot of Stanford, and a lot of the major premium league universities worldwide, and events as well. So the list goes on, but I'm very excited to have the list coming from his own mouth. So Matthew, a pleasure to have you here, and quite excited.
Yeah, thank you very much, Dinis. It's good to be here. Let me just mention that my focus is blockchain. So I know you said an awful lot of things then. I very much appreciate it. But for your audience, I'm very focused on blockchain and everything that goes with it. And I'm looking forward to speaking with you today.
Oh, fantastic. Blockchain is one of my passions. So I'm quite excited as well to have you here. And that's one of the areas that I want to touch. So I want to start firstly by a bit of your personal background. Everyone that comes here, that's probably the first part I ask is, what made the successful entrepreneur and businessman and as well career that you have today? A bit of your background, personal, professional, whatever makes sense in terms of your history that you want to, of course, share with our audience.
Yes, I'm happy to. It's been a long journey and not always in a straight line. I started off in the UK as a management consultant with McKinsey & Company and went on to be a senior partner and practice leader for other firms, Carney, where I ran the global financial services group with others, and then Booz, where I ran the global digital practice. And so this is my first career, and it was about 25 years working with the world's biggest banks and technology companies. My clients included, on the one hand, Bank America and Visa and many others, BlackRock. And on the technology side, Microsoft and Google and eBay and PayPal and others. And it was a very interesting time. The internet was just beginning. We were rolling it out in the 1980s and 90s, and I worked on many of those projects, launching what are today very important backbone services that we all use all of the time. By the 2000s, I had decided to become a full-time investor with my wife, Alison Davis. She was similarly at McKinsey & Carney, and then was the CFO and head of strategy for Barclays Global Investors, which is now BlackRock. And we had launched iShares during that period. So we decided to focus on investing, and I became a full-time investor, internet, fintech, and digital content, which means video games and virtual worlds and things like that. So it's a continuation of how can we support and help the entrepreneurs that are using digital technologies to transform industries and businesses around the world. And so for me, it was quite logical that when we saw Bitcoin in about 2012, that we really understood that it was a enabling technology, that the blockchain was a perfect complement to the internet in ways that I'm sure we'll talk about later on in this interview. And so we pivoted. So about 2014, we decided to be 100% focused on blockchain as investors. And then we created Blockchain Coinvestors shortly thereafter. And that's what I do with most of my time today. So even though the journey has been a long one, the common themes were digitalization and enabling a world in which we all do everything we do through digital technologies.
Well, a fantastic career. And as well, you've been on the cutting edge of putting together, I would say since the beginning of blockchain, like I said, from Bitcoin and different areas. So I want to still on your profile and background. So when was the first time you start looking at cryptocurrencies and blockchain?
Yes. Well, so given my background, in the 1990s, we were working on digital payment technologies. For example, I worked very closely with Bank America on the launch of its digital payment strategies, in the launch of bankAmerica.com, and on exploring ways to move money and value through digital means. By the zeros, I was working extensively with many players, including, on the one hand, Google and PayPal and others who were, again, thinking about digital payments and digital wallets and technologies. But I was also investing in video games and virtual worlds where we did have digital assets and virtual currencies, certainly by the tens, in 2000 and probably 9, 10, 11, it was becoming fairly common to have digital payment methodologies within, for example, MMORPGs or virtual worlds. And these were not yet, I would say, cryptocurrencies. And obviously they were not built on top of blockchain, because blockchain, Satoshi Nakamoto had not invented blockchain until perhaps 2008 and 2009. But we were already working with digital assets, virtual currencies, digital wallet, and we were thinking about how can we help people move value rapidly around the world. And in the case of video games, the transactions were very small. So you couldn't use the existing mainstream financial infrastructure. You can't do cent or 10-cent transactions on Visa or MasterCard because the fees are too high. So we needed to have alternatives, and we were creating proprietary technology-based solutions for payments and transactions back then. The breakthrough of Satoshi Nakamoto was to really come up with a complementary technology so that we could securely and reliably conduct real commerce and finance on the internet. And really, that was 2008 and 9. And for us, that was a eureka moment. So, Dinis, in answering your question, I think the past is important for us because it meant that we were sort of primed to appreciate why blockchain was so important. Because we'd been working on this topic for 10 or 20 years before with a certain amount of success, but we also appreciated the challenges. And Satoshi just created such a simple but clean solution to some very challenging issues that many, many people had been working on for a long, long time, including the double spend problem and the way to complement the internet, which was itself insecure and unreliable in many respects.
Yeah, it's very impressive because at the end of the day, like you said, the internet is still quite young, but it's been changing the world economy. And of course, the blockchain technology has been much more sensitive because in one end, it's been changing, I would say, all parts of the world economy, at least the technology foundations. But it has a lot of, I would say, sensitivity, especially because of the cryptocurrencies and their impact on the financial systems and on the foundations of financial systems, but as well in all the areas of digital ID and all the different parts. So one of the questions still coming from your experience, and I think it's important for our audience because I think one of the challenge when you touch about technology and sometimes when you put these, of course, my audience is quite technology driven, but I think the challenge is still understanding the nuances of the impact of blockchain and as well separating what is the blockchain technology element and what is the cryptocurrencies and digital assets. And I know that even people that I think they understand, they still get a lot of issues understanding this. And probably if you go even in the community of investment or banking, there's still a lot of taboos around blockchain and cryptocurrencies. So with your experience in banking and finance, and as well being from the beginning of the internet to become as well a player, probably the most important technology, probably I would say the biggest technologies in the world as we speak are AI and blockchain. How do you see these kind of nuances? And as well, when you start investing in blockchain and looking at Bitcoin and cryptocurrencies, how do you look at these three different things? Because even right now, during even this in the US right now, there's still a lot of issues when it comes to cryptocurrencies, and there's been a lot of issues. But I don't want to go on the politics side mostly, on this three and your experience on that, at least for this part of the question.
Yes. So I think the way to help the people, your audience, but also the people that your audience interacts with, the way to help people understand this is to explain the journey the world has already been on. So in the 1980s and 90s and zeros, what we were doing was we were digitalizing communications and content. And we did that with a technology stack that we call the internet. It's not one thing. It's not the internet. It's a technology stack. It has protocols and middleware and whole stacks of technology, TCP/IP and Ethernet, HTTPS and other technologies that interact together, frame relay, compression technologies, and so on. And that technology stack enables us to digitalize communications and digitalize content so that we can move it over digital communication infrastructure. In order to make that work, we also had to upgrade all of the world's communications and content infrastructure, and we did. So, if you went back to the 80s, we didn't have routers and servers and Wi-Fi and web enablement in our homes and in our offices and in our business settings. So all of that we did. We built the infrastructure, we installed the infrastructure, we created the standards, and we made it possible for us to digitalize our communications and content. And today, about 6 billion people out of the 8 billion people on the earth, and pretty much every industry, every business, every government, every country relies upon digital communications and content. And we still have paper, and we still have people-based processes, but most of what we do is digitally enabled. So that's where we've come. The challenge is we have not yet digitalized finance and commerce. Most monies, most commodities, and certainly almost all investments are heavily paper-based and people-intensive. So if you try and buy a house, if you invest in a private investment or in a fund, almost all of that is paper-based. And even when we have more digitally enabled parts of the commercial and financial system, such as international remittances or payments, they're on version 1 technology. They're on technology that goes back to the 1980s and 90s. So it isn't real time. It's not low cost. It's not easy to access. It's not even very reliable. Things like SWIFT and the ACH system and so on. So we digitalize communications and content, but we have not yet digitalized finance and commerce. And that is why Satoshi Nakamoto unlocked this enormous opportunity, because the reason we hadn't digitalized finance and commerce was because we didn't have secure, reliable approaches. We didn't have digital identity. We didn't have solutions to things like the double spend problem. And so we didn't know how to move our finance and commerce onto the internet. The internet itself is very interesting. It does a lot of things very, very well, but it wasn't built for finance and commerce. It was built by mostly scientists and government and military researchers and developers who knew each other. And so they wanted to move messages and information at high speed, but they didn't need to worry about identity and fraud and other matters. So the internet is fundamentally insecure. We know that the breaches, the phishes, the scams are accelerating and are very problematic. So it's insecure. It doesn't have a system of identity. There's a last mile problem. So you can go device to device, but you don't know who stands behind the device. So we have fundamental identity issues with the internet. And as I say, it wasn't built for commerce. So it's very good at communications and content sharing and moving. It's not really fit for purpose for commerce. And so Satoshi Nakamoto wanted a peer-to-peer cash system operating on the internet. That was the goal. Satoshi wrote a white paper called Peer-to-Peer Cash and called it Bitcoin, but wanted it to operate on the internet. And so now the problem was, well, how do I complement the internet technology stack with some technology that will solve the issues of identity, trust, security in a decentralized, distributed way? And that was blockchain. So blockchain is a technology solution that allows the internet to be fit for finance and commerce, or it essentially upgrades the internet to become an internet of value as well. So the internet is good at communications and content. It can be upgraded to be good at value or commercial activities too. And so the internet plus blockchain becomes a complete solution for pretty much everything we want to do: communicate, share content, and have transactions of all descriptions, including value-based transactions. So this is really the way I explain it, because I think most people in the world now take the internet for granted. They use it every day. They tend to forget that it didn't exist 30 or 40 years ago. And then when they're confronted by blockchain, they don't have a construct, a mental construct to fit it into. And so I think that by explaining it this way, it becomes easier for people to say, all right, so I may not understand what the technology is, but I begin to see how a complementary technology could upgrade the internet and make it fit for purpose for a value too. And the last thing I would say on this question, Dinis, is your audience may be technologically sophisticated, but most people are not. So most people use the internet every day. Most people invest in internet companies like Microsoft or Apple or Amazon, But if you ask them to explain, well, what's TCP/IP and how does it work? Or what's frame relay? Or how does video compression work? They don't know. They can't explain it. And they don't need to. And the same is true of blockchain. You need to understand why blockchain is important and what products and services it can facilitate and why the digitalization of monies, commodities, and assets is so powerful. But you don't need to understand Merkle roots and hash rates and all of these issues. I mean, unless you're a technologist, you don't need to know how it works. You need to know the results that it can enable. And I would say that's true of almost every exponential technology. In a minute, we'll talk about artificial intelligence. Most people in the world, most investors, most business people, they will not need to understand how you build a large language model. They need to understand the products and services and the value propositions that AI can deliver. And so anyhow, it's a long answer to your question, Dinis, but I think the best way to explain blockchain is to connect it to the personal experience of everyone in the world, or at least the 6 billion that now use the internet every day.
No, it's a great answer, and really very important to highlight, because even people that understand blockchain, like you said, they don't understand how big, I would say, all the complexities and things that are related with that. And I think it's critical to look at that. You cannot really look at the internet without understanding what you just mentioned. And as well, this keeps moving. It's a moving target, every day more important. So I would like to now talk about your career. And I want to go a bit more to what you mentioned about the relationships between blockchain technology, some of the case studies, especially in areas like you touch, especially the most recent case studies, because of course there's a lot of case studies, but people still, I think I've seen the invisibility that exists, because blockchain is like a foundational technology. So it touches a lot of different areas, and it's difficult sometimes to put it in a simple way, even for people that are technology advanced. So I want to talk, especially, so mostly, of course, as the CEO of Blockchain Coinvestors, you've been achieving some fantastic benchmarks, and the numbers are impressive. I mentioned that. So 40 blockchain ventures worldwide, a portfolio of 750 blockchain companies, and 75 unicorns. So that's quite impressive. So tell us a bit about the history of Blockchain Co-Investors, a bit what you've achieved, some lights, some of the challenge and history, but as well your present focus and what you're doing right now.
Yes, okay. I'm happy to do that. Let me say that I think it's probably clear to the audience that the internet was something that we worked very closely on in the 1990s through until even today. And we were able to observe the enormous value creation that the internet unlocked. Most of the world's most valuable companies today are internet-based companies. And it is the driver of alpha, which means the driver of returns in public equities as well as private investing for the last 20 or so years. So what happened in the internet? What happened was a lot of startups got backed, a lot of entrepreneurs had great ideas, but actually most of them failed. And meanwhile, a number of very enormous and valuable companies were created. And it happens that expert internet investors tended to be the ones that funded those companies. So there was a concentration of successful internet investments that were backed by a relatively small number of very, very capable internet venture capitalists. And they have names that we all know now, like Sequoia and Andreessen and NEA and others, Kleiner Perkins and so on. So the specialist internet VCs tended to disproportionately back the best internet companies. And once that process began, the best entrepreneurs sought those firms out and wanted to be backed by them. Venture capital is also a power curve distribution, which means a small number of investments, even for a Sequoia and NEA, a small amount of the investments get very large returns, and a large number of the investments don't work out. They fail. So diversification is also extremely important. So these were some of the learnings of the internet years. If you could go back today to 1990, and if you wanted to be an internet investor, and if you wanted to get the best possible returns, the best strategy would be seek out the pure play internet venture capitalists, invest with them and in their funds, and selectively follow on invest when you can see that they believe that a company is becoming the emerging category leader in its space. So that strategy, if you had done it in the 90s, would have got you the best returns and you would have been a leading internet investor. Okay, so now it's 2015, and Alice and I have decided to become full-time blockchain investors, and we're saying, what should our strategy be? What should our strategy be for becoming active investors at the center of blockchain, both equities and tokens? And the answer is that answer. It's the same answer. You know, the best way to be a successful blockchain investor is either to be a pure play leading blockchain venture capitalist, if you have those skills, which are very difficult skills to have, because you need to really understand the technology. You have to be able to due diligence the code. You need to be able to really understand who are the best builders and technologists in the space. That's one strategy. The other strategy is to do what I just said, which is get to know all of those blockchain venture capitalists, invest in their funds, build relationships with them, co-invest with them, and selectively follow on when it's clear that a blockchain company is emerging to be a leader or a project is really taking off to be an important project. So that's our strategy. So we created Blockchain Coinvestors first and foremost as a fund of fund. That's why we call it co-investors. And we have relationships, and we are investors in about 40 of the world's leading blockchain venture capital funds in Europe, North America, and in Asia. And they have names in Asia. They have names like Dragonfly and Hashkey and Spartan. In America, they have names like Blockchain Capital and Pantera and One Confirmation and Castle Island and others. Sorry, I can't mention them all. And in Europe, they have names like Fabric and Greenfield and 1KX and so on. And so we sought them out. We invested in them through a fund-of-fund model. And then we also direct invest in the follow-on rounds, both in tokens and in equities. And Dinis, the numbers have actually grown since the numbers that you saw. So we are today, we have capital in about over 1,250 blockchain companies and projects. And we're actually in about 95 blockchain unicorns through these strategies. And our funds are available to all accredited investors. I'm not allowed to promote the funds on a public podcast or webinar like this, but we're easy to find. You just come to blockchaincoinvestors.com and we can talk if people are interested. But so anyhow, that's our investment strategy. It's an investment strategy built upon what we observed in the internet years as the best possible strategy, and we've just replicated it for blockchain.
Well, that's very impressive. Congratulations, because it's not a small task, to say less. And as well, I know how complicated it is, because focus completely on blockchain is a very specific area. And of course, blockchain has been going through a lot of ups and downs, or I would say more the cryptocurrencies than actually blockchain. So before I go to a couple of more technical questions, from the highlights, do you want to give us and share with our audience any kind of highlights that you think are more interesting, especially when it comes to some of the companies? I mentioned a couple of unicorns. I don't know, some of the stars of your investment, or some of the experience that you would like to share, because I think it's interesting for people. I think we always like to listen to the more interesting things that were the achievements.
Yes. Well, so it occurs to me, there's a couple of other things I want to say, Dinis, just to give everyone a frame for thinking about the space. So we've talked about it's the digitalization of finance and commerce, that it's complementary to the internet, that it basically upgrades the internet. We've talked about all of that. The next thing I want to just mention is that it isn't one asset class. And here I'm really talking to the investors who are listening, but blockchain is actually many different asset classes. At minimum, it's 6. And because we have, on the one hand, equities, so you can invest in blockchain companies that issue equity. And just as in any other area of technology, you can do that early stage, mid and late stage, or you can wait until some of them have become public equities. And so think of that as 3 asset classes: early stage venture, mid and late stage venture, and then public blockchain equities. But what's complicated about this space is we also have tokens, and we need to talk a little bit about how do you categorize tokens. But let me just say at this juncture that the tokens also go through very similar phases as the equities. So with tokens, there is typically a formation event. When the team comes together, some of the tokens are issued to the people that have begun the project, as well as to the foundation. Then there'll be a seed round, where some capital is raised and some tokens are sold. Then there'll be some private rounds, and then there's a token generation event, at which time the token will hopefully be listed and it will become a public liquid token. So again, three asset classes: formation and seed of tokenized projects, private rounds, mid and late, and then public liquid token trading, which is Bitcoin, Ethereum, Solana, are all publicly listed tokens. So they're public. They're like public equities. They're public tokens. So put all of that together, you've got 6 asset classes. We focus on the early stage. So we're early stage venture capitalists. We do a little bit of mid-stage investing as well in both blockchain equities and blockchain tokens or crypto tokens. We don't do trading. So we're not trading public equities like Coinbase, and we're not trading public tokens like Bitcoin and Ethereum. There are other people who think they're very good at trading in the public markets. So I wanted to give this frame of reference because, Bitcoin is not the same as an early stage blockchain investment. They're at 2 different ends of the spectrum. And then the other thing, Dinis, we should briefly talk about is, what is a token? Because there's a lot of confusion on this topic as well. Every asset in the world is owned by someone. And to prove that you own an asset, you need to have some proof of ownership, which in the case of finance is typically a certificate of ownership. It could be a stock certificate. It could be your title to your home. It could be a fund, a document. That is your proof of ownership. And as I've already mentioned, it's often paper-based. If we digitalize the ownership certificate for an asset, then we can move the ownership digitally. And this is very important. To move ownership value across the internet, it needs to be digitalized. And if we digitalize the ownership record, the ownership certificate for an equity, an investment, an asset, then we can move it over digital infrastructure, including the internet, and through digital wallets and exchanges and marketplaces. The technology we have chosen to use to make the digitalization of ownership certificates a reality is tokenization. So tokenization is a technology. It's a technology that allows us to digitalize ownership records and move ownership and value across the internet. And so if you understand all of that, then if someone comes to you and says, well, I've got a token, a crypto token, a cryptocurrency, you now understand the first thing you have to ask is, well, what is it you've digitalized? What is it you've digitalized? Is it an ounce of gold, like Paxos Gold? Well, that's different than if it's $1 like Tether or Circle. And that's different again than if it's ownership of a open source software project like Ethereum or Solana. So you need to understand everything I just said, that there's multiple asset classes in blockchain, and you've got to figure out which ones we're going to be talking about and which ones you want to focus on. And then by the time you get to tokens, you need to understand how you're going to categorize them. And you need to understand that Bitcoin, Ethereum, Solana, Tether, Circle, Paxos Gold are completely different things. They're just not the same. They're completely different. And because the underlying assets or the underlying project or the underlying value that has been tokenized is coming from a completely different direction. And I think many people get very confused about this, Dinis. So I hope that was helpful. But I wanted to lay this down right now so that when you ask me the next questions, we can refer back to these concepts as I try and answer your questions.
So it's something that, of course, it's the ABC of blockchain and the critical element. So I actually, I want to go back to the other question, but let me continue on this one because I think it's important for the train of thought around the token. So at the moment, we are in when it comes to tokens in particular, so continue on this part, we are in a very special moment because, of course, the number of tokens, if you just go to coin market cap, as we speak, the global cryptocurrency, this is for people we are interviewing in July 2024. So the global crypto market cap is $2.34 trillion. And at the moment, as we speak, we're talking about 2.4 million cryptos. And of course, legal disclaimer, I was responsible for probably to create around 5 directly and indirectly. So of course, my audience knows about that. And of course, you've been involved with this. Very important thing as well, some of the numbers are important to highlight. There's 792 exchanges, okay? And the volume in the last 24 hours, this is as July 2024, has been around $70 billion per day. And the dominance is 53% Bitcoin, afterwards probably with 17, Bitcoin with 53%, 53.7, and ETH 17.6. So that means that between these two represents from the $2.4 trillion around 70%, and the rest 30% is the rest of the 2.4 million tokens. So I would like to, my question is, so from this liquidity that you mentioned, so first a lot of tokens are liquid, others are less liquid, but of course there's major ones, and a lot of tokens are subsets, so actually probably all of them subsets of ETH, Ethereum, and blockchain. So from your work as an investor and as an expert as well in the industry, how do you see the market right now? One of the questions. And second, all this, in one end, amazing number of cryptos, because a lot of them are zombies, and as well the evolution of the industry, especially when it comes to tokens. Let's just talk about that.
Yes, thank you. So, wow, there's a lot there. So there's a technology stack, the internet technology stack, simplified, protocols and distributed, decentralized communications and content sharing infrastructure at the bottom. In the middle, the transactional layer, things like search engines, browsers, and so on. And on top, the application layer and things like, Amazon and Facebook and so on built on top. There's a stack. And the way that rolled out was we had to begin with the internet protocols, which were created and given away for free. So they were not investment opportunities. And then people like Cisco and Intel began to build enabling technologies, and those began to roll out. And then applications, electronic commerce applications, and new companies like Amazon were launched. And eventually on top, whole new products and service categories like social and mobile offerings were created. Okay, so now blockchain is exactly the same. The difference is you can actually invest in the protocols and the infrastructure layer much more easily in blockchain, whereas you couldn't do that so much in the internet. So down at the bottom, we have protocols, and they have names like Ethereum and Solana and Polkadot and Near and so on. And they are building out operating systems, leveraging blockchain technology, and they have different features in terms of speed and throughput and capacity and cost. And so they tend to get used for slightly different purposes. In the middle, we have a transactional layer, but we're talking about the transactional of digital value. And so everything we do in finance, we have to do again in a digital format. So we need custodians, and we need wallets and marketplaces and exchanges, and we need payment rails and connectivity of all descriptions in a digital format. So we need all the infrastructure layer and all of those companies and projects to be created and funded. And right in the middle of that, we have DeFi as well. DeFi is financial infrastructure without the need for the intermediary. So it's slightly different from the way the financial system currently works, but the purposes are the same. How do I access value? Where do I hold my value? How do I transfer my value to someone else? And how do we transact and trade and so on? And then on top, we have the applications, and the applications are emerging. We're using this infrastructure to create new ways to entertain ourselves through blockchain-based games, or create content through NFTs and value and content sharing platforms, or blockchain-based social and communication approaches that don't rely upon advertising and so on. So we invest in everything that I just described. Our strategy is to be investors in the best companies and projects in every part of the technology stack. So you asked for examples, but our objective is to be in them all. So as examples, we were early investors with Blockchain Capital. Blockchain Capital was a very early backer of Ethereum, but so was HashKey, where we were an investor. HashKey was also one of the early investors in Ethereum. So we got early Ethereum exposure through our investment in those firms. But the same is true in Solana and Polkadot and Near. We were early investors in all of those protocols because we were investors in some of the venture capitalists that backed them. At the infrastructure layer, custodians, we're early investors in Anchorage, as an example, because that was backed by some of the investors that we've backed. I'm using it as an example. But then in terms of wallets and exchanges, we were very lucky to be early investors in Coinbase, but also Kraken and Uphold and Wintermute and others, because we backed the VCs that backed them. In the case of the NFT world, we were early investors through venture capital partners in OpenSea, but also in Dapper and So Rare and Super Rare and a host of other NFT players and platforms. So I could go on, Dinis, but when it comes to things like payments, we're very lucky to be early investors in Tether and Circle, which are probably the leaders in US dollar-denominated stablecoins. But again, it was always because we backed the VCs, and the VCs are great, and they went out and sought the best entrepreneurs and gave them capital. And I could keep on going. So we have a highly diversified investment strategy, and our goal is to try and be in as many of the emerging leaders of blockchain as possible. We do a twice-a-year report, which we call Meet the Blockchain Unicorns. You can download it at our website, and we count all of the blockchain unicorns and crypto projects worth $1 billion or more. I think currently there's like 186, I think is the count this month. And we're an investor in 95 of them. And we think that's a good measure of success, because if you're an early stage venture investor, at the end of the day, you want your projects to grow to be the leaders in the space. So I hope I answered some of your questions, but I want to emphasize that the heroes here are the builders that launch these projects using this technology. And then it's actually the venture capitalists, and we back those venture capitalists, but they have names. It's Bart and Brad at Blockchain Capital, it's Matt and Nick at Castle Island, it's Sunny and DC and the team at HashKey, and I could keep on going. These are the heroes. It's where the project builders and the people that back them initially come together, and we always need, even the best projects in the world need some capitalization at the beginning, and that's where we try and get involved.
Well, thank you. And it's really great, a great masterclass in blockchain and all these different parts. And I think for people listening to us, definitely you will put all the links that Blockchain Coinvestors has quite a lot of material. So one of, and of course, the list of things and all this data is really very important. So one of the things I want to touch, and it's something that you just mentioned, but I want to elaborate on that is, of course, the blockchain industry is going through a huge transformation. In one end is much more mature. And of course, we have to separate, like you said, there's a lot of layers. There's blockchain technology, there is a foundational technology, there's the NFTs, there's a lot of parts related with multiple payment systems and protocols. And of course, I would say all the areas around the payment systems and corporations, there's still a lot of maturity going on. And I would say that we still didn't get, I would say we got mainstream part of the technology around, especially technology, because like you mentioned, players like Cisco, Google, or Amazon are actually having blockchain as a service. They sell it. But of course, when it comes to tokens, there's still a lot of maturity or work to be done. So I want to touch a bit on that. So when you mentioned about tokens, the liquidity and non-liquidity. And of course, there's the zombie tokens and the good tokens. For people listening to us that, of course, are more into the token side of the blockchain industry, how do you see the challenge and the opportunities on this? And I know that we passed 1 hour, but this is fantastic questions. It's a great masterclass. So if you can continue a bit more, this is a long one. I'm quite excited even to have your thoughts on this.
Yes. So, Dinis, let's start off with the serious, well-meaning builders. Okay, so tremendous computer scientists, tremendous, developers who understand blockchain and the technology with good intent want to change the world in positive ways, and they want to digitalize centralized ways of moving value and money and transactions and so on. And then they want to create decentralized equivalents of those same products and services and industries through DeFi and other means. And they set out on that journey, and most of them will fail. Okay. And that is the story of innovation. Most well-meaning innovators fail. And that's not bad. That is just reality. And we as investors understand that. So we know that innovation carries great risk and most investments will fail. And so if it's a tokenized project, if it fails to build the infrastructure or the product or service that it promised the community or the network, if it doesn't deliver on the white paper, then yes, the token will not have any value. And if the developers, the builders eventually abandon the project, then of course it will never have any value because it won't actually have anything built on top of it. I want to come back to that point in a moment. But fundamentally, we believe that software is changing the world and that blockchain-based software is very powerful, but it doesn't always work. And many of the projects fail, and that's fine. I mean, we take that risk and we understand it. Now, unfortunately, in all areas of innovation, there are also people that will say they plan to do something, but they don't intend to do it. And we saw that in the dot-com period. People would create a business plan or a white paper, but they'd create a business plan, they'd raise some capital, and they wouldn't build the website. They'd just take the money and they'd go. And these people are not serious entrepreneurs. They're not serious innovators, and they may have bad intent. And unfortunately, because tokenization was such a new thing, we got a lot of those people into the world of tokens. And so in the ICO boom and bust, many of the projects were simply fundraising projects that were quickly abandoned. And of course, the people that bought those tokens lost their money because they became zombie tokens, not because they failed. And that's the distinction I want to make. I mean, I think if well-meaning builders tried and failed, that happens. But there were another category of people who were not well-meaning in the sense they didn't plan to build. They simply raised the capital, abandoned the project, and took the money. And those are very unfortunate situations. So we have a lot of that in the world of tokens, but we have that in life sciences, and we have that in sustainable energy and enterprise technology as well. And the way you get around that as an investor is due diligence. So good investors do a lot of due diligence to try and figure out who are the real builders, and do they really have the right intent? And is their idea a good idea, and will they really build it? And if they build it, will the world use it? And will it create value? And will it be beneficial? So within the world of crypto today, we do have lots of tokens that have no value, in the sense that there is nothing valuable that has been built on the token. And here I'm talking really about protocol tokens and NFT and DeFi platform tokens. I'm not talking about stable coins, and I'm not talking about digital assets like digitalized gold, as an example. They have a different type of value. I'm talking about open source software development projects and networks that are building software for specific purposes. No, we have a lot of zombie tokens. And so then you have this weird thing, and it's very, very weird, which is these tokens have gone public very early in their lives. So going back to the asset class conversation we talked about earlier on, in the world of equities, you launch a software project in the early stage. You don't get to the mid stage unless you have a product and it works. And then you have some customers and some revenue, and you raise some more funding. And you certainly don't go public for maybe 7 or 8 years, by which you've got a real company delivering real software that really works. In the world of tokens, our tokens often go public in 18 months, 2 years, 2.5 years, when there's nothing yet being built. And so a lot of the zombie tokens, that was your name for them, zombie tokens, a lot of the zombie tokens are actually publicly traded, but they don't have any software that's been completed. And that is a little strange. And so then you sort of say, well, why does it trade? And the reason is because it's a speculative price. It's a speculative price point. And traders like to trade prices because they make money when prices move up or when prices move down, depending upon which side of the trade they've taken. So we have a lot of zombie tokens that are trading every day, and a lot of people buy and sell them, but they don't actually have any software that's been developed on top of them. And in my opinion, most of them actually don't have any value, but that depends on how you define value. So if you define value as being future discounted cash flow, well, you're not going to have any if there's no software and there's no product and services. But if you define value as what a willing buyer and a willing seller are willing to pay for or receive in payment for the asset, then of course they do have value because they trade. So I've said a lot there, but just to unbundle that is the state of crypto today. So we are a new industry, 8 or 9 years old. We have an awful lot of projects, an awful lot of equity companies as well. And many of them are very, very valuable today, and many of them are changing the world in very positive ways. But we also have an awful lot of failed projects, failed companies, and zombie tokens. And we don't invest in those things. We invest in great builders building great software on a blockchain-based platform who really plan to change the world in very positive ways, making value cheaper, quicker, easier, and more accessible for everyone in all of its forms, and making all transactions frictionless. We think that's all very good for the world, and it's very good for everybody. And that's what we invest in.
I want to highlight for people listening to us that I'm a huge believer in blockchain, and I mentioned the zombie tokens, like there's zombie stocks. And I think it's important to highlight as well that this international statistics, 9 out of 10 startups fail. That's the global statistics. So it's not different in blockchain. And I think this numbers is just because we're talking about 2.4 million tokens. And of course, the numbers continue, but there's a lot of fantastic innovation. So I know that I've been passing quite a lot of time, but fantastic. And I think for people listening to us, they can learn a lot like I'm learning. And thank you so much for your patience to go through the details. So one of the questions, of course, I have a lot of questions because there's a lot of interesting things we can go with Matthew. When you talk about blockchain, so coming back to the technology of blockchain, I think we talk about the industry, and of course, like I mentioned, you can go to the websites of Matthew and find a lot of fantastic information. We're going to put all the links below here. So when it comes to blockchain foundational technology, so you mentioned a lot of case studies from the use of, I think, special payments and technology, and of course, all the financial areas of tokens. But one of the areas that is increasingly important is the blockchain for identity and the blockchain integration to even create identity around data and therefore artificial intelligence. I know that this is a big question, but I would like for you to elaborate because it's one thing that most of people have no clue. And this becomes more and more important because all the blockchain models are more and more important and mainstream right now. But AI and blockchain is an industry that is not so well told, and especially just for people listening to us, most of the large language models, this is official numbers, 20% hallucinate. And of course, the quality of data is very redundant. And there's where it comes blockchain. But well, I would like for you to elaborate on this because, of course, being in San Francisco and being on the industry, you have quite a lot of insights.
Okay. So yeah, I'll try and give quicker answers. I know I've been giving some very long answers. So let's start off with identity. Identity is critical in almost everything human beings do, whether we're communicating, whether we're sharing information, whether we're transacting and trading financially or otherwise. We need to know who the counterparty is. We want to make sure that we're working with the person we thought we were working with. So in terms of people, identity matters, but it's also true increasingly of devices and of content as well. So is the device that we're interacting with the one we thought we were interacting with? Can we rely on the identity of the device as well? And by the time we get to content, as we know, we're going to increasingly be worrying about, is this content authentic? Is this content true and real? Because there's so many ways that we could be hoodwinked, so much fake information or whatever. So identity matters. And in the world at large, we don't have very good identity solutions. For people, we rely upon identity, things like passports and social security numbers or driver's licenses, which are easy to fake. Identity fraud is a huge problem around the world. It's very easy to get a fake birth certificate, to create a fake identity for a person. And once you have a fake identity for a person, you can create fake accounts, fake businesses, fake everything else. And the traditional system is fraught with that issue. So whether it's a credit card company, a bank, a telecommunication company, the number of fake accounts is quite remarkable. By the time you get to the Googles and the Facebooks, they routinely write off tens of millions and even hundreds of millions of fake accounts that have been created so that people can undertake spamming or other, attempts to hoodwink and manipulate real people, if you will. So digital identity is important at the level of the person, the business, the device, and eventually the content. And blockchain happens to be a technology that was created to allow for better identity, reliable identity, because it creates immutable records that can be fully public. In the case of Bitcoin, it's immutable, it's public, it's visible, it's pretty solid. We still have a last mile problem even in Bitcoin, in the sense, you may not actually know the human being that owns the keys, but there are ways that law enforcement and others have to make that matching, that last mile problem matching, and they do it pretty effectively these days. So that's a little bit about digital identity. We are creating digital identity solutions based upon blockchain, and we're doing that for human beings, but we're also increasingly worrying about how we extend that to businesses so that you know that this is a valid business because you can look them up on a blockchain-based registry. And we'll be doing that for devices, and eventually we'll be doing that at the level of content. Now, going to the question of AI, the way I think about AI, I think that we've known for a long time that software was eating the world, and that there's a technology stack, and that technology stack down at the bottom has protocols and infrastructure, and it generates data. And then we analyze the data and we get insights, and those insights allow us to take better actions for whatever purpose we have. So that software stack is going to have, and we've been working for 30 or 40 years to create intelligent software as part of that software stack. So it used to be called big data analytics and machine learning and algorithmic decision making. Today, we're calling it all AI, but the point is computer scientists have been working for a long time to figure out how do we create better insights and better actions based upon better data analysis, and the tools have been getting more and more powerful. So we did just have an amazing breakthrough because it was sort of the iTunes moment prior to the launch of iTunes and iPod. It was quite possible to get to digitalize, for example, music, download it electronically and put it on a device. You could do all of that, but it was pretty difficult, and you had to be pretty sophisticated and savvy to figure out how to make it work. Apple then suddenly showed up and made it easy for everyone. And so all of a sudden, we all bought iPods, we all used iTunes, and we all carried digital music around with us in our pockets. That was a really big transitional moment. Well, in the case of AI, that just happened because it was basically a UI, UX upgrade. People like ChatGPT made it very easy for you to write a plain language question into essentially a search bar and to get a result. It's very easy to use. It wasn't easy to use for most of us before. It was inaccessible for most of us. So this is a very big moment in terms of generative AI and its use case. But the point I'm trying to make is every software stack is going to have AI embedded in it. And we've known that for a long time. And we've just got a rapid acceleration of the power of those technologies. And they're coming to the mainstream in this time frame. The other thing that AI is beginning to do, which I think is worth thinking about, is if software is eating the world, the biggest constraint to that phenomena has been in the past that we needed human beings to write software, and there were not that many good software developers, and they took time to write the software. Now, those same people can have AI help them, and essentially write code and accelerate their software development process. So we've actually accelerated the rate of software development, 10x, 100x, 1000x, I'm not sure. But I think that that's really important too. It means that software is going to eat the world even faster. And how does this connect to blockchain? The third part of your question, Dinis? Well, it's all the same thing. It's all the same thing. It's all about the digitalization of everything we human beings do. So all of this is about software, and we give it different names: internet, blockchain, AI, Internet of Things, autonomous vehicle. It's all software. So everything that we're talking about is essentially the same thing. It's software digitalizing human activity, and we just are using different slices of software and slices of activity to enable all of that. So blockchain is very interwoven with AI. in fact. And I would say most of the best blockchain teams, the code, the builders, they're using AI tools. They're already doing that, and they're figuring out how AI can make their blockchain solutions even better.
Well, I want to, first of all, thank you. I still have a lot of more questions, but I want to be respectful for your time. And these are long interviews. Normally, my benchmark is long, but really impressive. I think a masterclass the way you synthesize. And for people listening to us, I want to highlight especially all the amazing amount of information that is, especially in blockchain, coinvestors.com. I think even me, a lot of things I've been learning a lot through this, from essentials, adoption, unicorns. For instance, the list of unicorns is quite impressive, regulation scenarios, and the newsletters. So for people listening to us, a lot of education and a lot of fantastic intelligence as well, because of course, this is a $2.4 trillion economy, and it's not going to continue, but it's going to continue growing, not stopping, is what I mean. And of course, the level of expertise is amazing. So I definitely probably want to do a take two, because there's much more questions. But I think for today, we're going to wrap up here, and I want to be respectful of your time, quite a busy gentleman. So Matthew, it's been an honor, very excited, and as well made me think about a couple of things, because as a technologist and as a blockchain, and I was as well one of the first people writing about blockchain, I've been always in and out because of some of the I would say the negative issues, but the positive outnumber the negative. And I think you touched that in a very good way. So thank you for your time and for your wisdom as well that you shared with us.
Thank you, Dinis. And I hope this was helpful to your audience. Happy to do another session at another time. And thank you for mentioning blockchaincoinvestors.com. We do publish a lot of information and content. Part of our goal is to try and demystify the space. And we do think there's a lot of confusion, there's a lot of fake information, and there's a lot of people who are very negative about innovation and change. And we think blockchain is fundamentally a positive technology and a positive innovation, and the world needs to be upgraded in many, many ways. So speed, cost, accessibility, fairness, equality, all of these things we can accomplish with some of these technologies if we use them in the right way.
No, completely. And I think especially for people listening to us, there's 5 newsletters that I can only highlight that are really critical, from the adoption to unicorns, regulation, and scenarios, which I think is key for anyone that is in the industry, but anyone needs to be in the blockchain industry because it touches everything we do. So thank you so much. Definitely we'll continue with the take two, and we'll be going probably more technical, but I think it's good for our audience, for the ones that on the right. Thank you so much.